Well, it's a pleasure to be here with you guys. My name is Ajani Smith-Washington. I'm an associate at Base10 Partners. We are a venture firm in San Francisco, and we invest all over the world in founders of every background in companies that are leveraging technology to create the future. And I have a few slides today, but I just first want to say, um, you know, everyone in the audience, whether you're a founder, prospective founder, employee at a startup, you guys are the reason that, we at Base 10 get up and are excited to do this job every day. There's a lot that goes into, being a venture capitalist. And it's not all just talking to, the most interesting people in the world every day, but that's the, kind of part of the job that is most inspiring, is talking to people that have big ideas that are trying to change the world, just like you guys. So without further ado, I'm going to get into a few slides that I have just to talk a little bit about what Base 10 is, what we focus on, who we are. And then I'd love to leave a lot of time for Q&A at the end, just so that, any specific questions that you guys have about fundraising, different markets, Base 10 as a firm, can all be answered by me, hopefully really well. So without further ado, I'm going to share my screen. Okay, great. Everybody can see this? Great, thank you. Okay, so at Base 10, we invest in automation for the real economy. And so for us, what that generally translates to is companies that are building software that automates processes in old industries and that helps firms, consumers take advantage of opportunities that they have because of digital transformation. And the way that we like to invest is pretty simple. We pick trends that we think can support multiple scale software players, and we try to meet as many entrepreneurs, investors, experts as we can within those trends. And so we try to really lead with our research, and let it lead us into trends, groups, communities that are going to be really influential in creating automation that solves problems for the 99%. And I'll talk a little bit more about what that means in the upcoming slides. But the first thing to know, I guess, because you guys are all founders, is just a little bit about the different ways that we'll actually invest in companies. So the first is the early stage side. There we're investing to lead seed and Series A rounds. Checks there are generally between about $1 million on the low end, $30 million on the high end. And the broad theme that we invest under, again, is automation for the real economy. And the vast majority of the businesses that we invest in are software businesses, whether that's technology to enable e-commerce merchants or automate retail supply chains. But there are a few other kinds of businesses that we'll invest in. We have a coffee cart company in New York called Blank Street, and we have a media company called Rebel Girls that publishes inspiring stories for young girls in the portfolio as well. So there's a little bit of diversity in the companies that we'll invest in. But again, the vast majority are technology companies that are building software that is sold to consumers, or more often, other businesses. And so the general kind of thesis around our firm is that we think that, and we're not alone in this, that there are a lot more industries and a lot more processes that are going to be automated over the course of the next decade, 2 decades. And that in order to, be the investors that are able to serve founders that are trying to build for this coming wave of automation, we have to, be focused and try to pick the trends that we think are going to be most influential within this, and then spend as much time as we can, building our networks within those trends, understanding what people are building, why, who's buying it, why they're excited to buy it, and kind of be a part of increasing the penetration of technology like into our economy. And the reason that we believe we're uniquely suited to do this is because of the backgrounds of the people that make up Base10. What is a venture firm at the end of the day? What is any company besides a collection of individuals all united towards a common goal? And so at Base10, we have a lot of founder DNA as a company. So the firm was founded by two partners. You can see them on the screen here. So one, Ajani, half Nigerian, half Spanish, founded a social network in Spain called 20, sold that, came to the United States, started a few more companies that you see on the screen here, ride-hailing company called Cabify, a company called Identify that sold to HR departments, and Job and Talent. And then decided to settle down and start Base10. And then, through those founder experiences, he actually funded the other founder of Base10, TJ, who was a career investor, and then decided to start a company called Jobber. And through the course of his fundraising process for that, Ade actually found him, funded him. They liked each other enough, got together, started Base10. And here we are several years later. That was all around the end of 2017, beginning of 2018, when our first fund was launched. The first fund was $137 million. This fund this latest fund was $250 million on the early stage side. And then we've just closed our third fund in the early stage side, which will be between about $450, $500 million. And the next thing to know about us is that we, in the middle of last year, started a growth fund called the Advancement Initiative. That fund invests in leading growth stage technology companies and then donates half of the profits from that investment to historically Black colleges and universities across the country. And it does that in the form of scholarships that are in the names of the companies that we invest in. So we started that a few months ago. There will be like Notion scholarships, Figma scholarships, Breck scholarships, Plaid scholarships, and more. And we're really excited about the reception that we've gotten. And it's been keeping us really busy over the past kind of 6-7 months. But we know it's just the tip of the iceberg, and we're excited to do much, much more here. So this is an issue and a cause that I really personally sympathize with, because I am a Howard Bison, newly minted, and it's really exciting to be able to serve Howard as part of the Base10 Advancement Initiative as well. And I think one of the reasons that Base10 decided that it was a good time to start a growth fund is because actually a lot of Base10's investing DNA comes from the growth world. So you see a few leading growth firms on the slide here, like Cotu, Excel, Summit, Insight, and others. And the kind of vision and habits that our team learned at these kind of like large growth funds has influenced the way that we like to find and work with the companies in our portfolio. So, okay, great. So the kind of basic way that Base10 looks at venture investing again is that it's not the same game that it was in the early 2000s, where a partner might see like 5 deals a week or something. It's a lot more. There's a lot more volume, first of all, of startups. And it's impossible for any investor to see every deal that's coming through. And so in order to stay focused enough to be able to be helpful to founders, we have to pick trends and prioritize them. and try to ignore almost everything that's going on in the startup ecosystem and stay kind of like laser focused on areas that we've decided to prioritize and become experts in those so that we can be the most helpful investors that we can to the founders that we ultimately decide to work with. So we try to do a lot of research in order to figure out what to prioritize. And then once we do that, we kind of know what we like, and we're doing everything that we can to get in touch with companies that we're really excited about. And then lastly, we try to be the most helpful value-add investors that we can. I think two areas where we really shine here are working with companies on, refining and scaling their go-to-market motion at Series A, or finding product market fit at the seed stage, or finding access to future capital from other really helpful top investors after the Series A stage. And so those are a couple of the ways that we work with companies. But I think from here you have pretty much most of the information that you need to know about Base10, and I'd love to just open it up for Q&A from the audience from here.
Ajani, thank you so much.
Thank you.
No, this was super insightful. All right, y'all, we got some questions. So let's see. So first question, can you share how many startups you invest in per quarter or monthly?
That's a good question. I think maybe the best way to answer that is to talk about what happened, with our last fund on the early stage side. So with that fund, we ultimately invested in about 35 companies on the early stage side. And it was a $250 million fund. We started investing out of that fund at like the beginning of 2020. And we finished investing out of that fund around, just like 2 or 3 months ago. And so that's a pretty active pace. It's a little bit more than one company per month, more like 1.5 companies per month. But every month is not the same. Some months, we're in wait and see mode, and some months we're, really active, and we'll do, 3-4 deals on the early stage side. But that's the kind of approximate pace that we work at.
No, that's awesome. And I mean, and I think it shows also, like you said, it's like you're not, as an investor, you're not able to look at every single deal that comes your way because you can't invest in everybody. That's why it is so competitive when it comes to capital.
For sure. Yeah.
So next question, do you consider startups outside of automation, or are you open to startups outside of your niche?
Yeah, that's a good question. So I think, at Base10, automation doesn't always mean AI. And I would say that, it rarely means AI. Most software automates a process, whether, a CRM automates the process of figuring out which companies you should be reaching out to this month, and which ones that you've already remembering which ones you've already talked to. So every piece of software should be automating a process almost. And at Base10, really, our focus is on trying to identify which markets are most in need of automation, and then serve those, find software that's serving those markets like in a really effective way. So as far as investing in things outside of our kind of niche, a lot of software, you can get us to take a look at a lot of software, but if your business, I don't want to say if your business is building houses that we won't invest in it, because we do have two businesses that are in the home renovation space, like in our portfolio. So I would say, like, in general, and this is just good advice, like, don't limit yourself. And if you think that you would be a good fit for a portfolio, reach out, and someone, probably me, will see your deck.
No, that's a great answer. And I think also to consider is like the TAM, right? So it's a lot of times if it's a bigger TAM, then you have a more likelihood of getting that invested. Next question. So, oops, sorry. Here we go. What metrics do you need to see in order to invest in a company?
Yeah, good question. So I think it varies on kind of like two dimensions. Well, more than two, but if we were going to make it really simple, the first is the stage, right? So if we're writing a small check, like for a seed stage company, it's going to be a lot less about the metrics. At Series A stage, still, the metrics become like much more important, I would say. And then at the growth stage, it's so heterogeneous, but metrics really do matter there. I would say at the Series A stage, I know this isn't everybody's favorite answer, because it would be nice, and again nice for us if there was a guarantee, like, oh, if a company has 1.5 million of ARR and is growing 1.5x year over year, then check automatically written. That would definitely make our lives a lot easier. But I think in general, the things that we're looking for are more metrics that point to attributes that a company might have. So if you think about what a company needs in order to scale, they need a product that's filling a need that people want, and they need for there to be a lot of people that have money to pay for that need, and they need a way of like finding those customers that's really efficient and scalable. And they might need one or two or three of those ways of finding their customers. And so at the Series A stage, in general, we're looking for proof through scale and momentum that you're solving a need that customers have, solving a problem that customers have, and then we are also looking for evidence that you have built a way of acquiring those customers that is something that with more gas on the fire and more refinement, can be scaled, can allow the company to scale its business in a really capital efficient way.
No, that's awesome. Thank you for that response. That makes 100% sense. Does anybody, if you don't have clarity on that, feel free to double check in the chat, but it was pretty clear. Okay, so next question. What does your fund consider? Oh, that's a great question. What does your fund consider early stages? There's
Okay.
like this weird space between pre-seed and seed. What does Base 10 consider early stage?
Yeah, no, it's a good question. I think at Series A stage, in general, and I think over the past like 2, 3, 4 years, the stage nomenclature has gotten more muddled than ever. But I think in general, at the Series A stage, again, the thing that we're looking at is this company ready to scale up? And are they building an engine that, with a few more pieces added on, can become a business that does 10 million of revenue, 100 million of revenue, every year, within a few years. And at the kind of like seed stage, we don't do that much differentiation between like pre-seed and seed internally. And I would say there's a lot more variation in what a seed stage business looks like for us at Base 10 than there is for Series A businesses. Series A businesses tend to be around the same range for us, and at seed stage there's a lot more variance. But I think at the seed stage, we can go as early as just two people and an idea, and as late as, I mean, technically our investment in Notion was at the Series Seed, and that was at a $10 billion valuation. So there's like there's not really a particular archetype like at the seed stage, but we can go as early as there is on the seed stage.
Right. And I love Notion, by the way. It's a great platform. Oh my God.
Yeah. I mean, literally our firm runs on Notion. So
No, it's awesome. It's awesome. So next question is, do you fund projects in South Africa? Do you fund projects that are real estate or fintech based founders?
Yeah, that's a good question. So, one thing that I would like to point everybody to as well is that on our website, we actually publish a lot of the areas that we are interested in. So if you go to our website and then you go, which is base10.vc, and then you go to the research tab, then there you'll see like a huge list of trends that we're interested in or invested in, and a lot of the companies that are in that trend that are both in our portfolio and mostly companies that are like not in our portfolio, and what stage they're at. And so that'll give you a good idea. But yes, the one of the most important trend dives for us over the past year has been fintech in Africa, actually. And we're closing our first two Series A investments in that space now.
Yes.
Um, and both businesses are based in Nigeria, but that's no accident. I think there's been a lot of volume. There's been a huge volume of startups in Nigeria working specifically in fintech. I think I saw a stat the other day that like 1 in 5 like venture dollars in 2021 went to a Nigerian fintech company. But yeah, the short answer is yes, we would invest in a company that's South African and that works in fintech or real estate.
Awesome. Thank you, sir. And next question is, what is the quantitative criteria? So this founder means, what are monthly, like what's the minimum MRR that they need to have? Like what are maybe minimum customer base? What would you consider like a good amount where they have product market fit? Things like that.
Yeah, I guess it varies for a Series A investment. I think it does vary. I would say if I was looking at like the statistics, there at Series A stage, there are more businesses that we invest in that are like past 1 million of ARR than there are that are under 1 million of ARR for sure.
Mm.
Just because it's the like larger scale that you are, to an extent it de-risks that question of whether or not you are serving a market need that's really deep. Um, but everything when you're, I mean, at a basic level, when you think about valuing any asset, it's about, okay, how fast is the revenue from this company going to grow? Like how fast has it been growing? And how much revenue is it doing right now? And those two, from those two data points, you can basically figure out with more accuracy than if you didn't have them, like how much that company is going to be worth. And so it's kind of a sliding scale between growth and scale for us. So the faster you're growing, I would say the like less scale you have to achieve in order for us to become believers. And then the like larger you are, the more likely we are to be able to believe that this is a company that's ready to scale, and they can become multi-billion-dollar outcome. But I think there's no one like data point
Right.
like that's going to make us invest. It's like sliding scale between those things, but growth is good.
Right. Growth is always good. That's good to know. This question, I think, is a really great one. Was asked, what's the best way to secure a meeting?
What's the best way to secure a meeting? Yeah, that's a really good question. I think there's two ways of thinking about it. Like one is if you are going after a particular firm. So if you're going after a particular firm, I think the like best way to secure a meeting is through somebody that the like firm already knows. Um, and that a lot of that information is like public these days. But that's one of the best ones. And if you are just trying to get a meeting from any venture capitalist, like if you're trying to be, because a lot of firms spend a lot of time reaching out to founders, I would say one way is to kind of look at there's a few like databases where companies pop up. So like Crunchbase is one, um, and there's a lot of others like Source Scrub and your company. Like that's a way that we will identify companies that we're interested in as well. So if you can make sure that the information about your company, on those public databases like LinkedIn, Crunchbase is accurate and reflects yourself in the best light, then it's more likely that you're going to get found by an investor who's looking for companies in the space that you operate.
No, that's great. I have a follow-up question actually. So part of like the barriers to entry that Black founders face a lot of times, not always, duh, but is that social network and access to people at the fund. So in the event that they're not able to get a warm intro, what would you suggest is the best way to be seen, be heard outside of Crunchbase? Maybe they're about to be maybe they're about to start fundraising, and so not a lot of people know about them. So, what would you say is the best way outside of Crunchbase and outside of a warm intro for a founder to get in front of an investor?
hmm Yeah, I mean, cold outreach is another way. Uh, I think that one of the like best ways around all of that though is still to attempt to solicit like a warm introduction, just because it's there's a lot of I think, this might not be the most like popular thing to say, but I think that like venture, and this goes for a lot of like venture firms. It's a very social, like private market investing and public market investing are extremely different. Private market investing is really relationship driven. And, startup investing is private market investing. And so I think the like best way is to start ahead of the time that you're interested in fundraising, socializing with investors, with founders that like know investors, founders that have already been funded, obviously know investors, right? So socializing with them, talking to them, like being mentored by them, and learning from them. I think getting other people in the community invested in you is like the best way, and that like can take time. But I think the best way is not like waiting until you're like fundraising or you might like need to fundraise, but is
Mhm.
starting like maybe even before you found your company. To founded your company to start to like build your network so that you can meet the people that you need to meet in order to get to the next stage. I think that's probably the best way. I think a lot of the companies that we invest in, it's not like we met them when they're fundraising. um, uh, when they started their fundraising process, we knew them like over a period of time, and then the time became right in order to invest in them, and that's what we did. So I think that's the best way.
No, that's actually like that was a gem, y'all. If y'all didn't catch that, that was a gem. Growing your network from day one of you building your company or even in the ideation phase is amazing. And we're gonna end on that note because that was just it was perfect. So thank you so much, Ajani, for your time, for your energy, for your information.
Thank
And
you.
next, thank you so much. Next, we are going to bring on two of my actually good friends, Devon and Miles at Devland. But in the meantime, we are going to just take a quick 10-second break and we will be right back, guys. Thank you so much.